Good morning. It is just after 12 UTC on Thursday, the 6th of February. Finally feeling like myself again. Anyways, going over some of the events that are coming up today and tomorrow and some Bitcoin price action. We'll run through everything. So, big things today. We have initial jobless claims coming in at an hour before the New York opens. So, just keep an eye on that. Higher than expected. The forecast is 214,000. Anything higher than expected can be taken as negative or bearish than the dollar and likely to have an upside effect on the markets as the dollar declines. The market will likely have an upside, and the vice versa is true as well. Tomorrow, we do have quite a bit of data coming out an hour before the market opens, so definitely keep an eye on Friday. I expect pre-market movement there with all of the different stuff. And then in half an hour after it opens, there's also the Fed monetary policy report. So some definitely volatile events coming in that could exacerbate the price action. Looking specifically at Bitcoin, we've had a steady rise for the last, 2 days, going from 54% long now that we're 65% long. And just within the last 4-hour period, we're seeing some pretty aggressive shorts. This is good. If we want to see some pops back to the upside, we want to see some aggressive shorting coming in. And in the last effectively 4 or 5 hours, it's been pretty significant where it's actually come down about 5%. So a lot of aggressive shorting as we've had some local upside. This is good for a potential continuation in the local little upside trend that we're starting to form. We're at resistance, but we'll go through that with some upside targets and some invalidations if we start losing levels again. So on the funding rate side, this is awesome. We're almost at neutral. These are generally bullish funding rates across the board. It looks great. Gate's a big outlier there. BitMEX less than its normal 0.01. And even the Binance, Bybit, OKX, the big guys, they have very low funding rates. So this looks good. It feels like I think they've accepted that the short order book has been built back over the last 6 to 8 weeks effectively. Looking on the liquidation side, so yeah, we had the nice little move down. We had another double tap of that level late last night, early this morning. We've been actually grinding up really nicely, allowing some local short liquidity to build, and it looks quite decent. Now, because we're doing a little bit of like double bottom, it's very low time frame. It's a little bit too early to tell. As long as we're holding the lows that we put in yesterday at around, call it 96K, we shouldn't see a revisit of the lows that we did on Monday. If we start losing that, we absolutely need to come back and grab the liquidity at the lows and see if we can establish this as a higher low. That being said, we're technically getting some local higher highs. We popped the high that we saw from yesterday, which is nice. And there's a lot of short liquidity, especially building up around 103, even all the way up to 104K, even just in the local, like 1 week outlook. If we start looking at it in perspective of two weeks and a month plus, it actually looks a little bit better because there's a lot of liquidity starting to stack at 106 and it's starting to layer in all the way up to like the 114, 118, 120 zone. So we're pretty significantly high above everything else. I would say even on a higher time frame, losing that 96K, definitely want to see a revisit around 93.5, key high time frame levels there as well. But this liquidity above us, because we've had the big lower high, it's allowed short liquidity to stack with the last major gap above us around 104.5, 105K from basically where we failed from end of January. So in the liquidity side on the heat map, we've got quite a bit of order stepping in here locally. I'm just going to thin it out a little bit more. So there's some local resistance that we're at. I would expect that until this gets taken out up to 100K, you're at some local resistance. It's not major positions, but in general, there's not a whole lot of stepping in below us right now. So this is just resting liquidity, right? These are limit orders effectively that are resting in the books. So we do have some resistance above us. Until we get really close to it, where it might act as like a magnet, it's kind of buffering away. So if we do see some local failures, there's some stuff to retest below us, 98, potentially down to like 97.5. So just remember, anything that gains what we're at, basically reversing out now or at resistance now, we should see a move much higher, potentially all the way up to like 101 to retest the lows here, just based off structure. And on the liquidity delta, basically showing what's happening on the spot and perpetual tickers regarding direction. There is some resistance here on spot. There's some selling of perpetuals. There's some shorting as well. So like I said, we're at some like local resistance, but anything that gains the local high is effectively a potential move to flip us higher. So with all that said, all that word soup, going over to the chart itself, what have we really done? So we had a nice big wick back to the downside, key level, wicking below the December open, closing above it. Had a nice little loss yesterday, broke us back down to December, and now we're holding it with some really strong 4-hour closes. Now with this, we do have some untested levels below us, like I said earlier, 97.5. We got weekly open, a couple daily opens actually right here as well, and we're at a local resistance point. So my expectation is getting above, call it 99.1. That gain should actually see us sweep the short liquidity back up into this high where there's a potential short back down. If we bypass it, we'll likely squeeze all the way up towards 105K. So this is actually looking good for a bounce in the sense that we want to create higher lows. Even with the possibility of coming back down to the daily, I don't think we need to, but even a local one just to like retest, say, yep, okay, we're doing okay. And then we potentially have a continuation. Looking on like the lower time frames, the hourly looks strong. This is nice. This is exactly the type of price action that traps short traders, right? Instead of grinding down and nuking, flat grind down nuke, now we're seeing kind of grindy upside price action. And what that does is it traps shorts. It gets people trying to short, oh, I'm going to short the failure, I'm going to short the high, even though you don't lose anything locally. So like I said, we're at that local resistance. There's some stuff to test structurally below us, 98K, 97.7, 97.5. So there's some stuff that if we have some push off at this resistance that we could absolutely retest. The more bullish this little push down retest is, whether we go there weekly, I don't really want us to revisit that, but we could definitely target the daily open in December if we have a failure of the weekly to come back down. So the more bullish the test is here, and the moment we make a new high at this high, we'll invalidate this local resistance structure, and then we start talking about like 101 coming all the way back up to the main resistance, which is up here at 102.5. Anything above 102.5 and you're instantly going to 104 and 105K. And right now, I don't even want to think about the lows. The lows are fine. We don't need to retest it. If we happen to fail, we have a very clear level, right? 96.3, 96.5, basically this structure. It's the daily open, December. It's a swing point. So until we fail this and then come back to this, it looks good. This little upside move, it's strong. We'll see how good the bounce is. The invalidation of a local bounce, like no matter how bullish, would be losing the December. And then you start talking about the move right back to down to test the lows. And yeah, until you lose that, it's still looking generally quite good. So I think final thoughts is really simple to kind of get through all the word salad. You're looking at some local resistance, probably some pushback potentially to the weekly, potentially to the daily. The more bullish the back test and anything that gains above this, you should see a squeeze right back up to retest 101, previous daily opens, and then you get your macro resistance at 102.5. It's only when you start losing levels, like lose the weekly, potentially test lower, and then if you lose 92.5, or excuse me, 96.5, 96.3, basically this structure, only on this do you really want to start targeting the lows, because the local price action, you've created higher high, right? You're potentially making a higher low. We just want to establish that higher low. So that's it. Take it easy. Catch you later.